go now live to President Joe Biden, who is making comments on this whole situation.
The government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally, we must reduce the risk of this happening again. During the Obama-Biden administration, we put in place tough requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you we will not stop at this. We'll do whatever is needed. On top of all this, let's also take a look at a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs, more jobs in 2 years than any president has ever created in a single 4-year term. Unemployment is below 4% for 14 straight months. Take-home pay for workers is going up, especially for lower and middle-income workers. And we've seen record numbers of people apply to start new businesses, more than 10 million of them, more than 10 million applications over the last 2 years starting businesses. Now we need to keep this progress going. That's what swift action that my administration over the past few years is all about. Protecting depositors, protecting the banking system, protecting the economic gains we've made together for the American people. Thank you, God bless you, and may God protect our troops. See you in California.
Mr. President, what do you know right now about why this happened? And can you assure Americans that there won't be a ripple effect?
That was President Joe Biden speaking about the collapse of Silicon Valley Bank and also the seizure of Signature Bank. The president emphasizing here that there will be no taxpayer burden as a result of federal regulators coming in and making depositors of those two banks whole. He said that they're now still trying to get to the bottom of what happened, that the people who are responsible have been removed, and indeed the management of Silicon Valley Bank in particular is no longer in charge there. And he talked about trying to figure out how to reduce the chances of this happening again. All of this, as we've talked about, after the federal government stepped in on Sunday to protect Silicon Valley Bank deposit holders, as the fallout has ripple effects across the banking system in the U.S. and indeed the world. Let's get right to Yahoo Finance's Jennifer Schonberger now with the very latest. We obviously just heard from the president, and I know you were listening into various calls as well happening over the weekend explaining the unfolding situation.
Good morning, Julie. That's right. We just heard from President Biden assuring the American public that their money is safe. Depositors at SVB will be made whole, and none of these losses will be borne by taxpayers. Investors will take the fall on this. Officers of the bank will be fired, have been fired, and that Americans should be confident that their deposits in their banks are safe. Now, the president saying that we need to get the full accounting of this, and no one in his administration is above the law. He called on Congress and regulators to enact new rules to ensure this doesn't happen again. Now, these comments coming after the president's direction and recommendations from the Federal Reserve and the FDIC last night, spurring Treasury Secretary Janet Yellen to take emergency action to make depositors of Silicon Valley Bank whole and create a new lending facility to backstop deposit withdrawals across our banking system. As I noted, depositors of SVB will have access to all of their money starting today. Depositors are going to be made whole using the FDIC's Deposit Insurance Fund. Again, regulators stressing no taxpayers will bear losses for this. Now, the Fed will offer funding to banks through a new facility dubbed the Bank Term Funding Program. This will help ensure banks can meet all depositor withdrawals. This is both insured and uninsured across the banking system. This action being taken to thwart any contagion risk. On Sunday, regulators also took control of a second bank, Signature Bank, which was reeling from a bet on crypto banking and a crisis of confidence following SVB's failure. Signature Bank marking the second massive bank failure in 3 days. Now, the Fed's lending facility is designed by the central bank to cover all insured deposits in the U.S. banking system and will be backed by a $25 billion exchange stabilization fund at Treasury, which officials say they do not expect to tap. Fed officials stressed the Fed is not purchasing securities at banks, only lending against their book value, and that no bank is being bailed out. Regulators underscoring they're just trying to help depositors of institutions and that the bank's equity and bondholders will be wiped out. Julie, both the Fed and the Treasury and President Biden, you just heard, saying they are prepared to take further steps as needed to shore up the banking system. Back to you.
Jen, there was a lot of chatter that there would be an auction for these assets. What happened to that, and why wasn't that taken?
Yeah. Hey there, Brian. So the government did seek bids for Silicon Valley Bank, but decided to scrap that auction, just given the time constraints and the fluidity and the emergency of the crisis. They wanted to make sure that depositors knew that they were going to get their money back before markets opened on Monday morning to try to thwart any contagion risk. It's possible they could revisit that in the future, but at this point, they wanted to stop any leakage from happening. And that's why you're seeing them backstop both insured and uninsured deposits at this point. Pretty unprecedented.
Jennifer Schonberger, thanks so much. Appreciate it.